In today's video, I'll be going over the power of three and I'll be going over those three concepts in depth so that you can understand why I use it, when I use it, and how to use it. Also, that we are going to be starting off this video, and I'll just for now, I will just be using the path tool to just draw out price action to explain these concepts, and then we will be going into real life charts. So let's get into it. So we always have to have a high time frame buy. So for in this example, these blue lines will be my high time frame point of interest. So you want to have a high time frame bias, and you also want to have and be trading in the direction of the high time frame as well. So we are bearish on this high time frame, and this blue line indicates these blue lines indicates our high time frame points of interest. So when we are looking at the power of three in a bearish situation, we have price expanding to the low to the bottom, and then once price then pops into another area of interest which is on the higher time frame, price will then retrace into another area that we can use to then take price lower. But the elements of the market are, which is the way in which the market moves. So we have expansion of price, then we have reverse. Okay, let me just type this out. So the elements of the market, let's just put it. Excuse the spelling. Market. Expansion, retracement, expansion, retracement, reversals, and consolidation. Consolidation. So these are the elements of the market. So the market moves in four ways. We are either expanding, retracing, reversing, or we are consolidating. So once you know what these things are, you can implement it into or apply it to the charts. So we have price expanding to the bottom, popping into a higher time frame point of interest, and then price will retrace. So this is our higher time frame, and normally I will pop down to a lower time frame. But the first concept we'll be looking at is when price is consolidating. In this case, the power of three. This is what we call accumulation. So let me just make this bigger. Bring this down here. So AMD, A is for accumulation. So accumulation. What is accumulation? Accumulation is when price is just consolidating, which means that price is just moving sideways, creating and engineering liquidity. So when price is accumulating or consolidating, we will have price engineering liquidity both sides of the market, buy side and sell side. In this case right here, since we are still bearish and we are trading in the direction of a higher time for points of interest, as we can see that supply is in control. So we will obviously we will have another supply area somewhere up here that price will use to take price lower. So let's just mark that as our points of interest, my POI. So this is my higher time frame POI, and we can see that supply is in control. And as we can see, price started to move away from another area of points of interest, which will be just basically price retracing. This is price retracing into an area where price will use to then take price lower. So in this trading range, we can see that price accumulates. When price accumulates, like I said, price is going to engineer liquidity both sides of the market. And since we are selling in on a high time frame bias, price will first take out buy side, then price will take out sell side. So this phase here is what we call accumulation. So I'm just going to mark that out so that you can see. This is what we call accumulation. Then, and then we've got sell side liquidity, and then we got buy side liquidity. That was engineered in the state of price accumulating. So just put this, let's put this lower. Okay, I'll just leave it for that for now. But as you can see, price when price consolidates, it engineers liquidity both sides. But in this, since we are bearish, we want price to take out buy side first, and then take out sell side in the form of manipulation. So the next concept we're looking at is manipulation. Manipulation is when price takes out liquidity, whether it be sell side or buy side. And as we can see, we have price manipulating, taking out sell side, buy side first, and then sell side. Because we are bearish, we want price to, in this example, we want price to take out buy side first because our higher time frame bias is bearish. So this will be the manipulation phase. Once once price has accumulated and manipulated, price will then seek an area of inefficient price action in the form of imbalances or fair value gaps or inverse fair value gaps, order blocks, or whatever you're looking for, breaker blocks, whatever price leaves behind, you can get into the entry. Because when price moves lower, it displaces and leaves behind imbalanced price action. So that means price will leave behind an area of inefficiency that you can target or set a limit so that you can get into the trade and continue taking price lower. So when price manipulates, it takes out buy side and then sell side. Because we are bearish, we want price to take out buy side first and then target sell side, because price will manipulate and expand lower, leaving behind a another area of interest which will be there. And once price does that, you need to wait for the next move, which is the distribution phase. Okay, which is the distribution phase. So all the distribution does is it retraces into the area that was created. The distribution phase is when price pulls into an area that was created in the manipulation phase. So normally manipulation phase will be price displacing lower, leaving behind a fair value gap or another point of interest that you can use to target and take price lower. So in this area, we've got distribution right here. And I normally wait for price to take out buy side first, then sell side, and then I wait for price to leave a point of interest behind. And then when price retraces into this area, I will have my entry set at that limit order, and I will be targeting whatever is left, whatever liquidity is resting on the left here. I will be targeting whatever liquidity pool or whatever, whether it be equal highs or equal lows, or another fair value gap or another point of interest that I'm targeting. That will be the whole setup. It's the same thing for the bullish scenario where we will be having price moving in the uptrend direction, and then we will be pulling back, and what we want to see is price accumulate, and then we want to see price take out sell side this time. Because we are bullish, we want price to go higher, so we want price to take out sell side and then buy side, and then in the manipulation phase, and then as we are expanding higher, we will also leave behind another point of interest, and we can get into the distribution phase. So right now I'm going to show you a couple examples, and I'm going to show you a trade that I took, that is still I'll see what it's doing now, because I haven't checked my trades yet, because I got two trades running already. So I've got these two trades running already. So we'll see, um, in the next few minutes, some examples. So I said that you can use this on any time frame when you can spot it, but you can also use it in the session. So I'm going to speak more about the sessions now. So normally in the Asian session, we normally have accumulation and followed by manipulation in the London session, and then we have distribution in the New York session. But if you get to the market, so this is on the 15-minute only. So I use the 15-minute to spot these things. If I don't see them on the 15-minute, then I will go look for this concepts on higher time frames. But I don't always use them. It's just when I'm able to spot them, I can incorporate them into my trading style, because I use smart money concepts to trade, and this helps me to also, it's an extra confluence, I would say. So on the 15 minute, we normally have in the Asian session, we have accumulation, and then in the London session is normally manipulation, and New York is normally distribution. But if you get to the chart and you see that the Asian session has manipulated, you don't you shouldn't expect then the London session to accumulate. You should expect the London session to distribute, because when you get to the chart, AMD, right? So if you find the Asian session manipulating, you will find the London session distributing, and you will find the New York session accumulating, because it's a cycle. So if you don't, so it all depends on what the Asian session is doing. So you can trade this using using the sessions on the 15-minute, which I recommend. So let's look at some examples. So right here we have the power of three play out. I know it's not that clear to see, but if we go here on the daily, you will actually see that we have this going on here. So we have price doing this, then we have price taking out buy side, pricing out sell side, and price distributing into a point of interest, and price targeted the low on the left, and we are heading towards this liquidity right here. It is where price is going next. So as you can see, you can use it in this example right here if you are good at spotting it. So that's why I use the 4 hour, because on the 4 hour you can actually see it way better. So as you can see, when I popped into the chart, as you can see, I used the high time frame bias, which we can see we are bearish on the daily, and I use the daily as my direction to trade in, and my weekly we are bearish on both higher time frames. And when I saw price accumulating, then I started to just mark out by sell side first and buy side, and then price took out buy side. We are bearish, so we want price to take out buy side first, and as we took out buy side, we then moved into this. We filled more of this 1 hour, one weekly for value gap, and as we pushed higher, we also swept some more liquidity over here, and this was the main liquidity that we swept when price was engineering liquidity both sides of the market. And then we had price manipulate down, and we also had price change character, because we were uptrend here, and now we have a change of character, which means that we went from an uptrend for our structure to a bearish for our structure. So as you can see, we have displaced lower, we have the price manipulating lower, and as you can see, we have price leaving behind these inefficiencies, one up there and one down here. So when I saw this, I didn't have a limit order right here. I wanted to wait for extra evidence, and I'm going to share with you what extra evidence looks like. But if you want to take part in the AMD trade, that you could have just had a order right there. Sorry about that. You could have had an order right there and set your TP, your stop loss above that. And then you could have targeted this on the left right here, because we just took that low right here. And our price is looking to retrace. because we are um, bearish on the 4 hours. We must retrace all the way up here because we have just hit a major area of support on the 4 hour at least. So we hit this order block right here, and price is retracing, looking to retrace on the 4 hour. But if you got in here, you would have had a good risk reward ratio. But if you waited for extra evidence, you could have had an even better risk reward ratio. That is what I waited for. So as you can see, we had accumulation, we had manipulation, price taking out both buy side and sell side, and then we had distribution, price moving back into this inefficiency. Or you could have set, you could have set an entry at 50% of this fair value gap. That's also valid, and your point and your risk reward ratio would have be even better, as you can see. But let's look at what extra evidence looks like. So as you can see, we have the power of three playing out. So what extra evidence looks like for me is just when price pulled into this area, um 4 hour order 4 hour fair value gap. I was looking for a lower time frame change of character, or any form of change of character at this specific area right here. Let's just change it to a 1 hour because it's more apparent here. But it's actually up there. We have a change up there, but as we can see, we had price has not retraced all the way up there. That is why I mark this as my major change of character on the 1 hour. So once price changed character, right there, I had then this new range, which was this small range right here, and also I saw price has created this 1 hour 1 hour order block right there, and that is where I got was supposed to get in, but I did not sit in a limit order right there. I got in exactly right here. I didn't the better entry would have been at this order block right there, but I got in just as price started to retrace, and then I got in just a bit later than we actually wanted to get in. But as you can see, price went into my direction and price started chucking down. And as you can see, what extra evidence looks like is just a change of character on a lower time frame at a higher time frame points of interest. So my change of character would be a higher time frame point of interest, and a change of character on a lower time frame followed by higher time frame bias, so that we know in which direction we are going. As you can see, that was the whole trade. So this will be different on the 50 minute. So let's just look at the 50 minute. This shows you the session. So you can make use of AMD when trading session. So normally in the Asian session, we find accumulation, and we can see price has engineered liquidity both sides of the market, sell side and buy side. So this is the Asian session. New York session comes in with manipulation where price takes out buy side first and then target sell side. As you can see, we swept this liquidity and we have expanded lower. And the next phase, as you can see, we are in the distribution phase. So as you can see, when price expanded lower, we were left behind with this order block up here, or you can use the fair value gap that is resting below the order block. But I intend to use order blocks because we are moving large amount of money and we are trading with large institutions and central banks. So that is what I'm looking for. So I'll have an entry set at this order block, and my stop loss would have been above this high, and I would have targeted this liquidity which was resting below this low right here, which is a support area as well. And as you can see, price tapped into this area in our distribution phase, and a higher time frame POI on the 15 minute was left behind for us to then take an entry. And you notice this liquidity resting here. So I would not have gotten in here because we have liquidity in the distribution phase. You can get into on the retest of this points of interest because above this low or high, sorry, above this high, we have a higher time for point of interest. So the reason why I didn't get in here is because I knew price would have tapped this unmitigated order block and pushed lower because we have this liquidity resting above this. So price would have taken this out and tapped into this high time of interest just to take price down. And remember, we are trading in a higher time frame bias as well. So just take note of that. This is AMD.